time frame trend realigns, and you can start looking for longs. And ultimately, we start developing all that by seeing the disrespect of this supply. This is the supply which gave us the last drive down, which gave us new structure. This push up broke through this supply. Now I'm starting to think the bullish momentum is going to come back to the market. And the 15 is going to see this long before the 4-hour will. And the daily, again, we don't really use for much else other than knowing when the 4-hour structure is going to end. So now we've realigned with the higher time frame trend once again. So now we can continue to keep on running highs. And as of right now, your long-term target would be the highs here. So for management's sake, I'm always looking to run this high. If I'm taking a trade from here, I'm looking to run this high, and you're always looking to run the highs because our expectation is for price to continue ongoing. Our expectation is for demand to stay in control, but we also have to be smart. We pay ourselves every time a 15-minute high goes, and this keeps you getting paid no matter what. And if you want to leave a little runner on, this would be your long-term target, as we expect the 4-hour high to go as well. But it's a very good habit to get into, to pay yourself every time a 15-minute high goes, because nothing in the market is guaranteed. And it's good to have rules in place for paying yourself, because that's why we're all here. So we do have a bit of a pullback here. At the same time here, we also become bearish. So this is kind of our high point. We turn bearish momentarily here. And at times this will happen. And that's totally fine. Usually it'll realign itself pretty quick. So you can see we turn confirmed bearish on the 15. However, the last supply that gave us this drive here was quickly violated, and you could start formulating the idea that something in this doji caused it, and we can continue on up. So here we realign with bullish market structure. So yeah, you will find out with 15, sometimes it's too much structure, sometimes it's not enough. You will get used to it. It's not as bad as it looks. So here we take this high again. I don't think this is enough of a pullback, but it might be. No, it's not. So we have this high. This is our pullback, and ultimately we don't have any more structure till here. So again, very important that you don't start classing all of these points as structure. You're going to look at some people's charts, and every time it comes down and goes up and down and back down, and they map all these as structure points. They're not structure, they are substructure or internal structure contained internally within this high point and this low point, meaning that yes, we can build trade ideas off it, but until this low goes or this high goes, there is no new structure created, only confirmed by a candle body, not a wick. So once again, we have a big impulse up here, and I think this is enough of a pullback to class as structure. 15 pips definitely is. Here we create new bullish structure. It's always important to pay attention what's happening on the 15-minute, because if the 15-minute starts doing something weird, there's usually a reason. Sometimes it's just a liquidity grab, other times it is a signal for a higher time frame order flow shift, whether that's to realign with the daily or to perform its pullback. So here we turn bearish, and here we once again turn bullish. Now, if we just zoom out for a sec, I believe this might be, no, not the peak yet. So as you can see, we've mapped quite a bit of structure. Now what I'm going to do at the end of this video is I'm going to join all these dots with a green line. I'm not going to make everybody sit through it, and we're going to discuss it in the next video of how you can use it to form trade ideas, and then you can kind of see how it all works together. And I kind of wish more people taught structure this way so people can see how it works on the multi-time frame side of things. So this is enough of a pullback to be classed as structure. Again, I don't love this as structure, but it is structure. So now we don't have any structure till this high goes, and this high goes over here. So again, we don't have any real pullback till probably, I would probably say maybe here. It's borderline. We can class it as structure. Again, not my favorite structure point, but it's something. So as this high goes, we have another structure point. And we have a pullback. And here, we've once again created a new bullish structure. To me, there's really no real pullback till somewhere up here, and the pullback ultimately takes this low and creates bear structure. So now we have bearish momentum. We have a bit of a pullback here. So if we zoom in here, this wick did actually get taken. So this is actually new structure. We did get enough of a pullback here. And this is one of those prime examples of sometimes you get too much structure. And there will be times where 15 structure is really far apart and you don't have any structure for days. At times like that, you just look to see if demands are holding or supplies are holding, and it helps you out to know which way to go. So that's our first bit of structure. We have a pullback here. Now, I'm just going to call this impulse our end of impulse, and this our pullback here. This is right around that 10-15 pip range. If you didn't want to call it structure, you don't have to. If you do, you can. I don't really think we need to. There's really no reason to have any extra structure in that area. Now, speaking of this, again, not enough of a pullback, so we can basically call structure the end of this impulse. And you do have enough of a pullback here. It's probably roughly 15-20 pips. Here we turn bearish. the order flow turns bearish on us. So we'll just pause here for a sec. We'll zoom out and have a look at it all. So this is, I believe, where order flow starts shifting on us, and the second this low goes on the 4 hour, we see it first, you could start building a narrative of shorts are coming. So this will make a little more sense once we join it all. Again, we have the highest point to the lowest point, our pullback. Here the impulse really doesn't have any pullback till here. Once again, we make a new low, and here we turn bullish. And once you grasp this concept, the rest of it will come together quite a bit easier. So here we turn around and turn bearish once again. So if we just zoom in here, we do get bearish structure here. We have a bit of a pullback. We have a bunch of inducement in here, liquidity. Ultimately, you have more inducement here. You have a POI that needs to get mitigated, and you can target this low. What you can note here is nothing is able to break past this supply. Instead, we make a new low by taking this. So even though this is retracing up, we can start assuming this is liquidity and that the bearish order flow is going to continue. Now we smash this 4 hour low. Ultimately, we become bullish here. Our pullback is, let's see, not quite enough, so I'm going to say this is our pullback here. Here we're still making new bearish structure. Now this did just break it, but what you can start insinuating here is, once again, you have a demand zone that just is holding. You also have a supply zone that is holding. These zones can be complicated, and this is where understanding higher time frame and understanding that you just took this low, we expect some sort of a pullback. And you can start building a narrative that at least 50% of this impulse somewhere in this region should be met at a bare minimum in a retracement phase. It's not 100%, and it doesn't always work out, but for the most part it'll keep you on the right side of things. Again, we have a impulse, don't really have any real pullback. This isn't enough to be classified as structure. This, I think this would be your first bit of pullback here. Now we do turn unconfirmed bearish here for a bit, and that's totally fine.